Hey folks, it's Simon here with your Tao Daily video update for Tuesday, the 23rd of July, 2024. Quiet session on the markets on Tuesday. You can see here Nasdaq futures were down about, 0.38%. S&P and Nasdaq were both pretty quiet ahead of what was kind of the biggest day of earnings season so far today. You can see here Nasdaq futures currently down about 0.45% in post-market trade, largely thanks to Tesla. Tesla was the first of the Mag 7 stocks to report, and they said a big hit to sales volumes and rising inventories over the past few quarters. Demand both in the US and China have been weak. Now, revenue for Tesla on the quarter actually beat slightly, but EPS missed by 13%. Free cash flow missed by 30%. Operating income missed by 11%. And gross margins have hit their lowest levels since the first quarter of 2019. So that saw the stock sell off about 7% after market. The second Mag 7 stock to report was Google after market as well. They delivered an earnings and revenue beat. The stock was still down about 1.5% after market, which just goes to show if stocks cannot kind of beat and raise, and it's beat top line, bottom line, and then raise consensus estimates, they're probably going to have a tough time this earnings season. Case in point, Seagate. So Seagate cited improving cloud demand for its solid state disk drive products. Their adjusted EPS beat by 36% on a 2% revenue beat, and guidance for next quarter's EPS was raised as well. That saw the stock jump almost 4% after market. Texas Instruments as well. Stock was slightly firmer after market, where we had small beats on both revenue and earnings. Now, Visa had a more mixed quarter. Their stock was down about 4% after market on softer revenue than the market was expecting. One of the biggest earnings related moves we saw was in UPS. They reported a 10% EPS miss, largely attributable to higher labor costs. But UPS is often seen as one of those bellwether stocks. Obviously, they're a global logistics company, and the view is if less things are being shipped, that's generally a sign of decreasing economic activity. And it wasn't just packaging that took a hit, even high-end luxury retailers reporting weaker than expected earnings. We had results from one of Europe's largest companies out today as well, LVMH. They reported a 2% revenue miss. Their recurring operating income in the first half missed estimates by 4%, with China remaining a challenging market for them, with organic revenue down 14% year on year. Stock was down at 4%. So a bit of a mixed start to earnings season, with good reasons to tread carefully over the next week or two. That's what I got for you today. I hope it helps, and I'll catch you tomorrow.